Hey traders, this is Blake Morrow with Trader Summit. Make sure you join the most highly anticipated online free trading event of the year, October 21st through 23rd at tradersummit.net. We're gonna have so many great speakers for you for those 3 days. We have speakers like Danielle DiMartino Booth, Brent Donnelly, Mark Minervini, Peter Schiff, Danny Blanchflower, Helene Meisler, and many, many more. So make sure you do register, it's free. Also, our sponsor 8cap will be giving away 2 iPhone 14s to 2 lucky winners just for registering. So what are you waiting for? I'll see you there. Hey traders, this is Blake Morrow with Trader Summit, and I have Mr. Marc Chandler from Bannockburn Forex, and I'm so excited to have you here because today is such a crazy day following this massively huge beat. Well, I shouldn't say that, but a beat on every level. CPI data today, and the dollar just absolutely ripped higher, but reversed. And we're at this time, at the time of filming, you know, stocks are at their highs, the dollar's near its lows. What do you make of all this, Mark?
Yeah, it's incredible in a way, right? And I think this is what one of the things that I think separates, I want to say, the retail from institutional markets.
Yeah.
And that is when we are with our retail hats on, and by that I mean like a poker game and people who have the small stacks
Yeah.
at the table, you get the news and you react to it. Like, what else can we do? We're price receivers. We
Yeah.
get prices. We don't give them.
Good point.
And yet, the institutional side, though, I want to say that they're the ones with the deeper pockets, the bigger capital, the bigger money stack in front of them. And I think what they try to do to a greater extent is anticipate what's going to happen. That's why the markets are such a discounting mechanism. So at the end of last week, I'm going to try to sit down at the end of the week and try to make some sense out of the price action using what I think are instead of using these very highly sophisticated things, I try to go back to keep it simple, stupid. Because in some ways, I don't really want to know where the ideal trend line is. I want to know where people like yourself are going to draw the trend line, because that's what's going to prompt action.
Yeah.
Not like the perfect trend line, but where you would draw it. And so I try to look at the markets every week like that. And last week I was still struck by the idea we had that strong jobs data. I knew we'd get a strong CPI report. It was stronger than I expected, stronger than the market expected. But I still thought that this meant peak Fed hawkishness, at least another step up towards that peak Fed hawkishness. And today the market's pricing in Fed funds terminal rate about 5%. And I thought that what would happen would be that there would be room for a sort of buy the rumor, sell the fact, which is what I think.
And you put that out this weekend. You put that out this weekend, Mark.
Yeah, though, it's one of those things where even I think people like myself, we can only see to the end of our nose, and God gave me a long one. But even then, we still get so much of the story wrong. I mean, the dollar really was acting kind of funny in the last couple of days, not continuing to rally ahead of the CPI. The dollar rallied hard after the CPI. And it's one thing to think about these things like buy the rumor, sell the fact, but how do you trade for it? How do you position yourself? How do you know when the dollar was rallying after the CPI that was a head fake? And so I think that analyzing the market and talking about buy the rumor, sell the fact is one element, one block of what you really need to trade successfully, and being able to convert that into action, into being able to know when the reversal is. Like today, it seems to me we've got a key reversal going on where the euro, for example, trades on both sides of yesterday's range, and it looks like it's going to close above yesterday's highs. These are positive signs for me, but on the institutional side, we're trying to anticipate these things happening.
That's a great point. But now and I guess one of the most valuable things about reading your work all the time and all of these years, Mark, that you put out for everybody is getting your perspective, because that's the lens that you're using. And that's important for your readers of your posts and your thoughts to understand. And I think it's hugely beneficial to the community. So kudos to you. And now I got to ask you, I was going to ask you a little bit about the yen, but I really wanted to also ask you about the Bank of England, about the recent comments, but more importantly, the price action of the sterling, where everybody was thinking, hey, we're going to trade back below parity or below parity for the first time, ever. But here we are with the sterling has really turned around and turned a corner over the last couple of days. Do you have any thoughts on the Bank of England, their actions, and what they're doing to smooth the panic, if you will?
Yeah, I think it's like almost like Keystone cops. Like first it's the government, and they really stir the pot, and then
Right.
the UK tries to, the Bank of England tries to put the fire out, and they really ignite more of it. I mean, you take a look at like what until like yesterday maybe those gilts were still selling off throughout the Bank of England's operations. It's I don't know. I mean I don't know. I mean I think that partly I'd say that I don't come from that political spectrum of trust and what the government was trying to do. But at the same time, I recognize that the same type of response in the media, among market participants, among economists, same thing greeted Thatcher and Reagan. And remember that this idea that, well, the Bank of England's trying to squash inflation, raising interest rates. So what's the government doing? Coming along, spending more money or cutting taxes. And one of the things that, when we talk about prices, you and I are looking at patterns,
Yeah.
looking for patterns. And I find that there's also patterns in this politics and economy stuff. So the policy mix that I'm looking for, that macro policy mix that I think is the best for a currency, is what we had with Reagan and Volcker, what we had when the Berlin Wall fell, we even had under Trump. And that is sort of stimulating fiscal policy and tighter monetary policy. It's like the central bank's got its foot on the brake and the federal government's got its foot on the accelerator, and the currency gets squeezed higher. There's a number of like cases of this taking place. And so I'm not so I think that from just a tactical point of view, I think the market really overreacted, but it's partly because, and this is part of the challenge that we have and one of the causes of volatility in all the markets. At the end of 2020, there was like $17 trillion of negative yielding bonds in the world. By today, it's fallen by like 90%. And so we in the market have to adjust to, reprice assets with a higher interest rate environment. And it's a very messy process. And we only find out afterwards, like who was like less than careful.
Yeah.
And I think that what happened, it turns out that pension funds in the UK had borrowed money to do their liability like management, and net effect of this leveraging was like all of us, they were subject to margin calls.
Yeah.
And the margin calls had threatened the stability. And so this sort of forced the Bank of England from buying bonds for QE to help, when interest rates are near zero, to help expand monetary policy. They began unwinding that, and they were going to begin selling gilts. But then they had to reverse and buy bonds again. And this is that for me another like pattern here, and that is the importance of so there's different ways policy affects things.
Yeah.
And we often, as economists, as market participants, we're looking at supplies, sort of quantities and prices. And I want to suggest that the communication channel is very important. When the Bank of England says we're buying bonds, but it's not for QE, people say, but it looks like a duck, it quacks like a duck, it must be a duck. And I said,
But it's not.
It's a close relative, maybe it's a capon or something, because what they're doing is they kept the bonds separate, and under QE they buy. They just go to the market and buy. But under this program, they had to wait for the banks to sell it to them. And so if you're a pension fund, for example, you might decide it's better to hold on to your risk-free investments, gilts, and get rid of your risky investments. And so they weren't sellers of bonds. So the Bank of England's program was barely touched until they made it clear that this is it, that it's going to end tomorrow on Friday. So I think it's a messy situation, but I think that also the other lesson here is when there's a big panic, especially over politics in a highly developed country, I can see how it could be different in an emerging market, which is why I was so adamant in the social media that the UK is not an emerging market economy.
Yeah, it definitely rubs people the wrong way. So, and obviously you too. So
yeah, and so because I think that what it means partly is the UK is that when it comes to politics, people tend to exaggerate it. The role is so much bigger in emerging markets because of like institutional fragility and those kind of things.
Yeah.
And so to me, it seems that the people who, of course, it's sort of our instinct, right? We see sterling selling off to levels we've never seen before. We got down to 103.50 or so. First thing I'd say is that was done in Asia, not in European trading where the liquidity is the best for sterling.
Yeah.
And secondly, I'd say that, of course, it's easy, it's sort of like with the Federal Reserve, right? They've got high inflation. The time to change your forecast or your tools is not when inflation is rising, but it's because otherwise you look like you're chasing things. And so I think that's what we as analysts, as economists, market participants, we tend to chase things. And so sterling's falling. So, well, gee, where could it fall to? And we have levels without like attributing a probability to that. So I wouldn't be surprised if we find that sterling stopped at 103.50 and that's the low for sterling.
You know what?
We might make a marginal low, but I would suspect that that'd be my leaning right now is sterling has put in a low. There was an extreme panic low that wasn't necessarily justified. It's holding well above there. And I think that what's going to happen as soon as next week, even the UK government is likely to make. I think that U-turn is too strong of a word, but I'd say further dilute some of their fiscal stimulus, and that's going to give sterling a further boost.
You know, Mark, I hope, and I'm sure some bank analysts, sit here, listen to this interview with you, take notes, and take heed from somebody who's got the experience and the wherewithal that you do in the market. So thank you for your thoughts there. One last thing, speaking of FOMO.
I just wonder if it's a bit like, Thomas Edison said, that he said he didn't fail. He found 10,000 ways it didn't work. And I think that's what partly scar tissue in the markets are about.
Yeah, true. That's a great one. Mark, speaking of FOMO, so what do you think about the Bank of Japan here? Intervention efforts, are we at risk now that we're above the previous? People would think that the BOJ was targeting 145, but look, we're at 147.13 at the time of filming. What do you think here?
Yeah, so I'd say a couple of things. One is for people who are trying to trade and trying to time this market on an intraday basis, I think it's one of the hardest jobs that out there. I mean, it's a huge $6.6 trillion a day market, trying to time it for an hour, 2 hours at a time. But one thing that might give you some comfort is that it's very difficult for the Bank of Japan to intervene outside their time zone. If they were to intervene in the U.S., for example, the protocol dictates that they ask the Federal Reserve for permission. Not so much permission, but it's sort of like we'd like to intervene during your time zone.
Courtesy, right?
Yeah, it's a courtesy.
Yeah.
And so, yeah, that's probably a better way to think of it. And so, what this means then is that dollar-yen highs are likely to be scored in North America. And for people, what this would tell me is I'd rather play dollar-yen from the long side in the U.S. session buy in the morning and sell in the afternoon. And the idea that the Bank of Japan could intervene in Tokyo. But I would, and so that's the first thing I'd say is where could the intervention take place? Second thing I'd say about the intervention is that it's unlikely to get as big of a response the second time as it did the first time. And so the first time we went from 146.90 to about 140.30 or so, 140.35. So call that say $6 yen move. And so I would be surprised if they got much more than about half of that this next time. So if maybe rather than being a puncher, you want to be a counter puncher, wait for the BOJ to intervene. Dollar yen sells off on the intervention talk and news. And so how much of a pullback should you expect? And that's what I'd be looking at, something around the magnitude of about 3 yen, about half of the last move.
Yeah.
And the other thing I'd say is to keep in mind that the BOJ, I mean, these people are serious, they're smart. It's hard to outwit them. They think, they think, and I think that we can assume that they know that they're not going to try to defend a line in the sand. I don't think the BOJ ever really tried to do that. I would say though that BOJ, when they intervened, they used a record amount of money. It's almost $20 billion, and they bought some stability in dollar yen for a little bit. It seems like it seems expensive to sleep at night for 2 weeks maybe for $20 billion. But I think that also typifies what happens is when the BOJ intervenes, they try to like overwhelm the market. They try to muscle us.
Yeah.
But when the Federal Reserve intervenes, for example, not that they have any time recently, but they try to intervene, or when the Bank of England with this in their bond market has intervened, they try to finesse. They use much smaller amounts and try to time the market or do other things to try to get more bang out of the buck. And so that's the other thing to keep in mind, I think, is they're not really defending a level. I would take them at face value. I'm watching volatility, implied volatility, probably more than the spot action itself to tell me that, I'll give you an example. When the BOJ intervened, 3-month vol was implied vol. That's right, in the option pricing.
Yep.
Was but above 13%.
Woo.
We fell maybe a little bit below 11%, and we're back at 12% now. So I'd say, yeah, we're getting to those kind of levels again where the BOJ, they first talk, Japanese officials first talk about it. And I think of it as an escalation ladder, and they're slowly moving back up that escalation ladder. So it wouldn't surprise me that there is intervention, say, on this side of 150. So that's, just only a couple more yen away. But again, it's just the timing of it. What kind of response do we have? Are we punchers or are we counter punchers?
Yeah, that's a great way to look at it. And I kind of feel like it's like when NASA is sending a satellite to an asteroid, trying to just knock it off course. I look at these central banks as they can't really blow up that asteroid, but they can kind of knock it off course a little bit and try to suppress it. So it's interesting, Mark. I love your thoughts and I love your ideas. And you know what? I'm all about talking about mark to market, your blog, and posting, allowing our team to post your articles on our site. I think that's all great. But you know what else I really love of your work? I love your books, and I've got all of them sitting right back there. And let me ask you this: if I'm a trader and I'm hearing you for the first time, what is your favorite book that is most relevant in today's economy and today's markets?
Like a reading of, like, what book I was thinking, like
of
like
your
timely to
books.
read?
Yes.
Excuse me?
Of your books.
Oh, my books. Oh,
Yeah.
yeah. I don't know. I think that if you're just getting involved in foreign exchange, that first book about making sense of the dollar, where a lot of my social media stuff comes from, because it assumes that you already have a general idea about how the markets work, how the economy works, and so it's sort of like there's I think there's a American vaudeville, who says that the problem is not what we know, but what we know that ain't so. That we believe in things and like legends and like all kinds of stories from our own families too. We believe
Right.
there's sort of legends around us, and there's no slight about to Senator Warren about that. I mean, I think it happens to everybody in some fashion. But I would say that to what I try to do in that first book is take the general ideas that seems like almost everybody and their mother believes, and show why that life is a bit more complicated. But the second book is sort of it's funny that we talk about it a little bit, because I guess I'm thinking about the Chinese, the 20th Party Congress that's taking place this weekend,
Yeah.
where it's a momentous event. I mean, in many ways, despite whatever we think about China, it is the world's second biggest economy. It's the largest population wise. It really represents a big chunk of the world, and one of the things that everybody knows about China is its Belt Road Initiative. And in my second book, this Political Economy of Tomorrow, I found this American banker, journalist, who actually ended up working at Brown Brothers, same place I worked, but 100 years before me. And I sort of suggest that he proposed the Belt Road Initiative for the United States 100 years ago.
Wow.
And so he's sort of my protagonist as we try to deal with sort of the challenges at the turn of the century, but what it really means about the broader strategy of like a market economy. So that book is more like some of my friends tell me I should try to get a patent for to help put people to sleep at night. But if you stick with it, I think that you'll find it's an engaging story, and it's really less about history, but more about like how the history sheds light on what we're dealing with today.
Oh my gosh, Mark, after all these years, your wife's still taking jabs at you. My goodness. Well, hey, I want to thank you so much for spending your time with us at the Trader Summit community. Make sure you follow Mark on social media. Mark Making Sense is your Twitter handle. Is that correct?
Yep.
Love it.
Mark Making Sense.
Yeah, thank you so much, Mark. Have a great one. And we're going to look forward to having you on the next, probably catching up with you in the next month or two.
Great. Good luck to everybody. Thanks a lot.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.